The broadcast is now starting. All attendees are in listen-only mode.
Hi, Face. Good turnaround Tuesday to everybody. Good morning to you, Spencer. Everyone doing okay? So here's the Dixie, the breakout that wasn't. Right. So I was skeptical going with this breakout mainly because of positioning and DSI and sentiment. Thought it was pretty crowded going into the breakout. Now we're negating the breakout. So I didn't fade it either. And I sub no position here. The only currency I really had conviction on going into this week was the yen. And, here's your daily look, your weekly look, really on the verge of just melting. Okay, so the yen looks vulnerable to me down to about 109, 108, I think is possible. Uh, the euro is up, but it's fading compared to cables really leading the way. So tough for dollar bulls that bought this breakout, and we have a pretty negative week setting up, although it's only Tuesday and we have the Fed tomorrow and we have NFP Friday. So, I've learned over the years it's okay to say I don't know. So with I don't know going into the breakout, skeptical about it, had to respect it. Now it's negating the breakout, but with the Fed tomorrow and everything, I'm just really don't know what to do. What I am doing is I'm selling this RIP and crude, getting a pretty nice correction, bounce back in crude. We're halfway back from the decline that we had last week, mainly on late Thursday and Friday, back over the throwover line. I'm a little surprised we're back over the throwover line, but I'm still viewing this as a correction. Not expecting new highs that would surprise me, but I've been surprised before. So just layering in at fib retracements and moving averages, and we'll see if last week was real. We should know by the end of this week. So nice reflex rally there. And of course, with the yen under pressure, the metals are getting a decent pop. They too are, I don't know. One thing I do, and I'm looking at and beginning to consider, is this pop in copper. We're almost 50% back here. So between here and 295, being wrong over the high at 99. So I'll see how that looks. Silver, I'm not impressed. Gold actually looks a little better. We had this, and now we're 78.6 back. So, um, there are weeks where it's okay to be aggressive. I was pretty aggressive last week, but with all the noise, and Michael talked about it yesterday, he thinks the best trading days of the week are Monday through Wednesday. I'll take it out to Thursday. But then when you have the Fed on Wednesday and the NFP on Friday, I'd rather be pretty close to flat into both of those events and react to the events rather than try and predict them. And one prediction I could make is that you'll be happy to be part of our family. Who's part of our family already that comes here to face? Give me a Y if you are. Okay, Umar. Spencer is here. Okay. Mark Pompeo, our Secretary of Defense. Jack, Teresa, of course, Jacques. All right, I have a question for you guys. What is the best thing about ForexAnalytix to you? So we're a little more interactive today. Answers? Is it the pips? Okay, chat room, expert analysis, everyday support, the team. Tom loves the dashboard. Here's the dashboard. Can't drive a car without a dashboard. Jack likes the fact that we have diverse analysts and interactive communication. Independent team. Okay, a lot of independent spirits among the team. Blake and Steven Stelios don't dictate company line as far as analysis like a lot of companies do. Those are all pretty good reasons. Okay, there's another great reason from Dan. Alerts to his phone. So Dan, do you work? And this is an avocation for you. So you could go about your daily business and you can count on the team. If something important's happening, you're going to get it. Okay. Okay. Thank you, Umar. Umar wants more charts in there. Okay, Dan. So that's a great point by Dan. You know, a lot of people that want to eventually get to be able to just do this full time and let go of their corporate life or whatever it is that, um, you know, they may like it and it supports them, and but they love this. Okay, they may like their job, but you have to love this to want to do this full time. Because just like love, at times you'll have a broken heart. Okay, with love comes risk. With FX trading comes risk, right? Okay, so let's see what kind of pips we have working. So you also get the pattern in plays, and Andre's making money on the dollar, so he got short up there. Entry area was nice. Okay. Greg has got a CAD yen, and Greg is still long yen. So you could always check our close patterns in play too. Okay. They're not all winners. I mean, we're authentic. We don't revise when we take hits. But here are the numbers. 52% hit rate. Okay. Losing pips. Average. Average return. Average reward. Okay. The team will only go for 3-to-1 RDRs. Okay. So you're doing okay if you're managing the risk, and all the pips are managed with invalidation points. And sometimes, I know Blake does, he trades around a pip. Looks like you finally, see he's an Aussie Kiwi with the pip, but I know he's gone to the door and booked some nice profits. And then gets back in and then adds on and then gets out if it, the correction is going to be deeper. So you could also trade around these. You don't have to marry them. You can date them. Once you're in, you can't get out. Trading, Tom, like Hotel California, you could check out, but you can never leave. Yeah, I challenge anyone who's got trading in their blood to give it up. Let me know. I'll see you at the next FX meeting, FX Anonymous meeting, and we could talk about how at first you like to trade and now you need to trade. No FOMO. Okay, so you also want to check out, this is just simple for a skunk like. You should be getting a rebate every time you click your mouse. How many people are trading in here without any kind of rebate from their broker? Give me a Y. I know there's some here that don't care about it because I know, okay, Nina, because Steve Vogie didn't care about it for a while, but he's happy he talked to Trent and Jason. I guess a check because he doesn't have to subscribe because he works like a dog to make this, except lately. But since I've been here, the guy, lucky to get 4 hours sleep. So you need to join. And, I would skip the trial unless if you're in faith, there's no way you could be skeptical about faith is only just a glimpse into what we do. Jason Wright got 700 in rebate checks. That's on 1 month, is it, Jason? I don't want you churning yourself just to get rebates, okay? We still believe less is more. We're not, none of us should be in it to make our broker rich. They deserve to make money, but we're not here to make them rich. We're here to, yeah, several months. Okay. So, who in here is not a subscriber and I convinced them today to sign up? Give me a why. Anyone? Am I a crummy salesman? Give me a why if I'm a crummy salesman. Most people think salesmen are crummy anyway, all kinds of salesmen. But if the product is good, the salesman is actually providing a service and just trying to get you to open your wallet and let those moths fly away out of your wallet. So I really recommend you invest in yourself here at ForexAnalytix in your career and to whatever your goals and daydreams are of becoming a trader. This is going to help you get from point A to point B. And you have, I don't know how many decades of experience, but can you imagine all the mistakes we've made? All of us. Okay. But you know what? We persevered. We're still in the business and providing a lead analysis to our clientele. So, I don't think I have anything else to really. One thing I do want to talk about, Google is going to be getting hammered, and Google I thought was going to make a 3 drive move, and the earnings I think interrupted that. And then I'm going to turn it over to Blake. So let's just see. So I do follow a lot of equities. Here's Amazon. Let's get big picture here. Let's look at weeklies. So Amazon has retraced more than 78.6, but the Nasdaq's at new highs, right? Here's the QQQ. This could end up being a 3rd drive. So I'm watching the Nasdaq 100. In the Qs, if we close under 187.39 by Friday, you'll have a 2-week reversal. Just want to find googly eyes. Microsoft was the first one to make new highs. Okay, pretty powerful. They had some blowout earnings. I'll look at this gap and confirmed. So find something that hasn't participated in this new all-time high with the NASDAQ, and there are quite a few candidates, and I thought Google was one of them. Let's see here. Anyway, here's the some of the other things. Here's Apple. It was down yesterday. Here's a weekly on Apple. Okay, a little bit more than 61.8. After this, and Steve called it a broken stock. This could be a nice fade. It's not at new highs. Facebook, it's not at new highs. Here's Google. It's going to be down $98, it looks like, on the opening. You know what? It did make a 3rd drive. Look at that. That's right out of J.R. Hill's textbook. That's a pretty ugly week setting up there. Hi, Coach. I'm newest for EG is ranging. May I know how many days do we expect to consider ST and how many days a week before turning to bearish? In what? In euro? Okay. That's going to depend on, structure for everyone. Okay. So I know that Greg does some time, uses fib time periods. So I'm sure he'll drop in this week. Remind me to ask him, or you put it in the question box, okay? How are you today, Blake? Look at Google, man.
Hey, Coach.
Hey, bro. How are you?
I'm a little irritated. I just gave back some of my profits from the from end of month. I had some dollar longs and the euro
Yeah.
rallied overnight because of the positive European data. And it actually quite surprising. Italian GDP was stronger. We had really a swath
Wow,
of.
it came from Italy, and that's supposed to be the basket case in
Well,
Europe right
yeah,
now.
and of course, all the analysis is like, well, don't get too excited about the Italian numbers, but I mean, the overall, like, Eurozone GDP numbers came out better than expected. We had a little bit stronger inflation data out of Germany just moments ago, and overall, the Eurozone data is better. Flash GDP numbers came in better than expected. Unemployment rate came in better than expected. So
Can
the
you
euro.
flip and go? Can you flip after the last couple days, Blake, and get negative the dollar? It negated the breakout, and
No,
yeah,
not
that's
not
what I. Yeah.
not today. I'm not in the camp of chasing it up here.
Okay, I
Um,
thought so.
yeah, that's me though. That's
Yeah.
I have a more difficult time, I would say, than the average person on flipping. You know, going in the opposite direction. So but what you'll see in the euro dollar, we've rallied past the 50% retracement. It's where I had my stops. So I got stopped out on my euro short, and it's fine. It's just it's more irritating because I gave back a chunk of my profits, and it's at the end of the month too, which is really irritating because this is the last day of the month. One thing that we have to be a little bit cautious about, though, Dale, is this month, or excuse me, the end of
Right.
the month, we are expecting dollar selling. I've had a couple of different reports from different banks showing end of month is going to be dollar negatives. I think a lot of those flows have already been working through the market, but it's
Okay.
propelling higher because of
Do
the
they say
strong
why?
European data.
A technical reason? What's the reason?
Usually it has to do with how equity
Repatriation.
markets have, yeah, how
Oh,
equity markets have done, and if there's
sell
been
in May and go away. So that might include selling the dollar.
well, I don't necessarily know about that. I think there was a lot of strong equity market inflows over the
Okay.
course of this last month, which has led to some dollar selling going into the end of month as
Okay.
portfolios get rebalanced. Now, next month will be a different story. We'll see, how equity markets perform and what that actually translates to. But right now, it's showing uh, relatively strong dollar weakness going into the end of the month.
Yeah.
So the euro, and like I said, and
Thank you, man.
on top of the data that's been um, stronger, generally speaking, um, we've had a nice move to the upside. Now, what do we expect from the euro from here? Well, first and foremost, if you look at, like, intraday, the hourly RSIs are a little overbought. I don't think I would be chasing the euro up here if I was, looking to be long the euro, maybe looking at dollar index false breakout. And by the way, if you look at the dollar index, let me go over to the daily chart here. You can see how the dollar has come off pretty good. We're right around. I mean, this is all very key support. So getting too bearish the dollar here, I think, is going to be a little dangerous. You can see this, like, support zone, okay, and we're at the lower end of it. Does that mean you should be getting long the dollar here? I don't know. You got to kind of see where we close today, but we do have some pretty decent moves that have developed overnight. I mean, first and foremost, you go to the euro. The euro, we had this, you know, testing of the underside of this the breakdown point, and then we're rallying. We're at the 50% retracement. Like I said, I think where we close today is going to be very important. If the euro closes back below 112, you're going to have people that were late uh, getting long, or maybe covering, are probably going to be second guessing themselves and what they're doing. The flip side to that is a solid close above 112, might provoke some further short covering. going into tomorrow. I think a lot of it also depends on what equities do. Equities, which if you look at the S&P, this is our chart of the day yesterday. We touched all-time highs yesterday, and we're still in an ascending wedge, and which is ultimately there's a higher probability of the S&P breaking lower than higher. Not saying that it's going to. I'm just saying that it's there's a higher probability based on what we're seeing right here. But if the equity markets do end up giving back some of these gains, like let's say by the end of the day, could that provoke some dollar buying? From a risk aversion standpoint, it's possible, especially once we get past all the European closes and some of the fixing flows go through. We could we maybe see some dollar backfilling. We could see some dollar bouncing a little bit. But right now, based on what we're seeing right now, it doesn't look good for the dollar, and that's why I think that if you're long the dollar, you have to be a little careful going into today and seeing where we close. So overall, the dollar is weak. And Andre called it really well. If you guys use ForexAnalytix, he was going counter trend to what I was doing, which if and you can see he picked up the dollar index yesterday on the short side, which I was, for all intents and purposes, I was long the dollar, not short the dollar, because I was short the euro dollar. And this is one of the things that with ForexAnalytix, I want to be very clear here, is that I don't, and nor does anybody else here at ForexAnalytix, we try not to alter each other's ideas. And, Andre's using a subset of rules to make his decisions on why he is, bearish the dollar. And if you want to see why he's bearish the dollar, all you have to do is go ahead and take a look and go, oh well, this is an ABC AB equals CD pattern, and then you can go to the dollar index and go over to his harmonic analysis and go, okay, he was expecting a move lower from here based on what he's seeing. He sees a AB equals CD, and then in a push down towards 97.50. So, but not, we don't require that our analysis line up. And that's the beauty of ForexAnalytix, is being able to see multiple types of analysis, and then for you guys to be able to draw your own conclusions. And I'm going to see things differently than Grega or Andre or Amanda or Steve or whatever, but we all post our analysis as we see it on ForexAnalytix. And that's, like I said, that's the beauty of it. And then sometimes you have it where everything is showing one direction, which is good, because then you can go, well, all these different types of analysis are pointing in one direction, and then you read through the charts and you read through the analysis, and then you can say, well, I'm probably be better off going in that general direction of whatever all the analysis is showing. But sometimes we will have mixed signals, and that would be the situation with what we've got right now in the euro, for example. All right, so anyway, now as far as the euro goes, like I said, this is going to be pretty key support. Oops, that's not the euro. With the euro dollar, this is going to be pretty key resistance where we're currently at. Remember, there are end of month flows that are pushing the euro higher. Paulie this morning, who was doing analysis, he said that his bias chart was showing resistance at 112.28 in the euro dollar. So we're going to be heading up towards that resistance, and that's going to be all this previous support, current resistance, with the hourly RSI is a little overbought. It looks like we might, probably struggle once we get up here, but we haven't gotten there yet. We're getting close. The cable, let's take a look at the cable. The pound broke a downtrend, okay, line, and then also we had this bearish wedge that has shown a pretty big reversal. All right, so with this dollar weakness has brought in a reversal not only in the euro but also in the cable as well. So things you need to pay close attention to. Aussie is underperforming right now, which that means that some of these cross rates like the euro Aussie, pound Aussie, here they are right here. Here's the euro Aussie screaming higher. Here's the euro New Zealand, which is pushing higher. Pound Aussie, into new trend highs. We broke this downtrend line not only in the pound dollar but also in the pound Aussie. That's a pretty good indication if you're long the pound, that you got the pound that's actually rallying against some of these cross rates. So keep that in mind if you're trading the cable. I know a lot of people were trying to sell the pound as we were reaching that 130 level, but it's broken higher and it's showing us a pretty big reversal. So as long as we close above 130, it's pretty bullish indication for the cable. I think a lot of this is going to be dependent on where we close the session. Now, I don't know if Steve and Stelios are both here today, but what I will cover is the dollar Canadian, because we do have Canadian data. We have Canadian GDP coming out here momentarily. You can see the GDP numbers there are slated for release. Also, some inflation data. We have U.S. employment cost index, which shouldn't be a big mover, but with the Canadian, this is going to be a pretty important support for the dollar Canadian coming up. Now let's take a look at some fibs from the spike low. Remember this spike low here when we did this false breakdown to the highs. We're at the 38% retracement. So, and here's your breakout point. It comes in right around 134, roughly 10. Okay, this is all going to be very, very key support if you have any Canadian exposure. Now, I don't have any Canadian exposure going on this morning, so let's take a look at so dollar Canadian, I think coming into here is going to be pretty important. As long as we stay above 134.10, the risk may be higher, but I think this is one of those fair points where you need to wait for the data. No, trying to play the dollar Canadian to the long side right now with the dollar breaking down against some of these currencies, it's kind of dangerous. We'd have to get a move back above 134.50 right here, or 134.55 in order to be bullish the dollar Canadian. But like I said, this Canadian data could really alter the moves, especially if we have, you can see the Canadian, we're expecting 0.3%, I think, on Canadian GDP. Well, this is year over year. So let me go month over month. Would be 0.3% was the last read. Let's see what Bloomberg's looking for. So Bloomberg's looking for a flat reading month over month, but year over year at 1.4%. If those come in a little weaker than expected, that's what will provoke the dollar Canadian higher. So we're gonna watch this support here. We are a minute away, so stand by. Let's put this over here so we can see it. I'm going to keep it right there so I can get back and forth. I don't want to put it behind the screen. So watch these two numbers here. If they come in weaker than expected, we could see the Canadian, bounce. If it's a strong number and we could see, like, let's say, flat, 1.4, 1.5% on year over year Canadian GDP, we will probably slump back below 134. So let's stand by. Data is coming out here shortly.
Hello, I'm back. Hi, Blake.
Hey, Stelios, how are you?
I'm very well, thank you.
Heads up.
So,
Here we go. Weak.
oh yeah.
Yeah, that was weak. Wow. So watch if we get above this 55.
Hmm.
Wow, that was fairly weak. I just scalped the dollar Canadian for like 10 pips myself. I just bought it at 49 and sold it at 59. Or actually, I bought it at 45, sold it at 56. So thought I got some better prices than that on my sell, but I didn't. But anyway, so that's some weak Canadian GDP numbers. So that is weighing on the Canadian dollar. So we are, let me move this out of the way.
Raw materials price index also weaker than expected, so it's weak all around.
Yeah, some weaker inflation data. So watch the dollar Canadian, especially if we break. Let me be a little bit more I'm going to be a little bit more accurate with my analysis here on my charts. Let me get rid of that. Let me clone this. Yeah, that looks about right. So really, we need to get, we are above 55 right now, but we're probably going to need to move above 68, 70 in order for it to turn really bullish. But this has given the dollar a little bit of life. You can see how the euro dollar has turned lower just slightly. The cables, kind of got stopped in its tracks, and this is, obviously, it's dollar Canadian news, but the dollar is acting a little bit better as a result. It looks like Steve is here. Good morning, Steve.
Good morning, Blake.
How are you doing?
I'm good. I'm at the hotel's lobby because my son decided to fall asleep in the room.
Oh, okay. So you're in the hotel lobby. I'm sure people are walking by you going, what the hell is this guy doing?
No, it's a quiet hour of the day, more or less. It's okay.
All right. So anyway, we've seen a little bit of weak Canadian news. You see the euro and the cable and what they're doing right now. Any comments
I'm not paying so much attention to them yet. I mean, I know that everybody's jumping on saying that this was a false break higher for the dollar, and it might as well have been. But I think jumping the gun and saying it is so just because we pulled back a little bit. I mean, we still have a series of higher highs and higher lows in the dollar. So I do think, as you said, that we shouldn't pay so much attention to it yet. I think that the path of least resistance remains higher for the dollar as long as we're holding a channel that I'm going to show later. And personally, since you're talking about the USD CAD, I have to tell you that I like this pullback that we've had in USD CAD, USD NOK, and this rebound that we had in oil, because I think this gives us nice risk-reward opportunities to be long the USD CAD, long the USD NOK, and short crude oil after its reversal last week. So I think those are the best opportunities, at least, from my point of view, out there at the moment.
And one of the things about the dollar Canadian, this I was pointing out yesterday, that I think people have to be thinking about is we've seen this really strong move in crude oil, and yet the Canadian has failed to respond in a bullish manner. And the risk is starting to build. And in my opinion is if we have crude, which it's obviously got a little bit of a bid today. But if crude really starts to show some signs of weakness after having this extended move, and by the way, this here, let's do it like this. The inverted head and shoulder pattern basically completed, because if you look, the neckline should have been this. Here, I'll actually change the color of this here, and I'll make it a little bit wider. Let's make it wider and let's change the color. So
yeah, it doesn't really matter, Blake, because we know that the markets can't be perfect. I mean, even if it's not typically completed, like for a dollar or two, still, the general move from the inverted head and shoulders formation, for all intents and purposes, can be considered, as successful, right?
yeah, it's basically once it's completed, you have to start being more cautious about, like in this case, being on a bullish side of crude after this elongated move. So now that you have crude that's probably run its bullish course, at least for right now, if crude really starts to show some signs of weakness from here, like let's say we dip back below $62, what happens to the Canadian, and what happens you could even say the same thing about like the Norwegian krona. What
Exactly.
happens here? Does the US dollar Canadian continue its rally to fulfill its move up into this upper end of this channel that we've been following?
Yeah.
Which we move back up towards 137, 138. And I think that's entirely possible, especially if crude oil does end up showing some weakness around here. So
Totally. I think I think the risks are for a move to the upside. And even from a technical perspective, I mean, any way you slice it, I think that the thesis of being short is quite dangerous, and the risk reward anyhow favors longs here, right?
for the dollar Canadian.
Yeah, and for the dollar NOK.
Oh, and the dollar Norwegian krona. Yeah, I think it does. So, those are the things I think people should be aware of now. And as long as this dollar Canadian, I'm thinking about actually buying some down here. As long as this dollar Canadian holds above like this 134.20, I don't mind being on the long side, frankly. But we will have to see a little bit of perhaps some risk aversion start to show its head, and maybe start to see some weakness in crude oil. Are there any charts that you wanted to show people at home, Steve?
Yeah, another thing, by the way, since you mentioned risk, we had a melt up in stocks, this slow drift higher, but and nobody says that it can't continue. It obviously can, but what we in essence had is we've had like 5 months of an uptrend in stocks, no real correction whatsoever, while at the same time, we haven't had better earnings from the companies, and nothing, significantly has shifted. So, since you mentioned it, another reason that I can actually, point to the same direction for the person we were talking about is the fact that the risk reward is also lower in stocks. I mean, would you be buying stocks up here? What would your risk be if you were buying it here, and what would you target, right?
Yeah, I think most traders that are long at this point in time, and most people that are chasing the market higher, has come from two different schools of thought. It's I have nowhere else to place my money, so I have to be long equities until proven otherwise, because everybody's chasing yield, and there are a lot of people that are expecting a continued melt up in equities, which again, we are at all-time highs here. I mean, even though we have this little ascending wedge that could show a reversal, but frankly, we are at all-time highs, and break above 2950 will take out 3000, and 3000 goes on for who knows how long as this melt up continues. So from a risk reward standpoint, I agree with you. There's no there's the risk reward is tilted to be on the short side. However, I don't know if we've seen any indication that stocks are ready to roll over just yet either. So
no, we haven't seen yet. We haven't seen yet. Absolutely.
So,
I mean, we even haven't had, like, for 5 months, we haven't had even a proper correction. I mean, the most we've dropped lower within these 5 months is what, like 2%, something ridiculously low like that.
We have a couple of charts though, guys. Like Intel last week, one bad day broke that grinding uptrend you were talking about, Steve. And today, Google will do the same thing. So, just a couple of the stars are fading a little bit here.
Google reported yesterday, and it wasn't looking good. And last time I checked yesterday night, it was like pre-market, it was like -7%. I don't know where it is now, but definitely.
And it made a new all-time high first, Steve. Check it out. It's a pretty ugly candle.
We've seen that happen time and time again. Blake, if you want to pass me the screen, I should be okay. My connection should be more or less stable, I think.
Okay, I'm gonna mute myself, but I'm gonna be listening in just in case you run into any issues.
it's a good idea. And by the way, Blake, since you're going to be listening in, one thing I keep monitoring in stocks, and one reason why I value it much is because it's something I've been monitoring for years now. This is the S&P weekly chart, and I've had this pitchfork, this Andrews pitchfork with its 200% extensions on my daily and my weekly charts for years, literally for years. I mean, I think from 2013, something like that. So if you look at this, every time we approach this pitchfork's resistance, and I'm not talking about the 200% extension, which is here, which we've only touched once in this uptrend in January 2018 when we had that melt up. Every time we touch the last line before that or the line prior to that, we get a rejection. So we're already from that point of view, I mean, from a mean reversion point of view, just by watching this Andrews pitchfork, we've now entered, dangerous territory for a pullback from here.
Wow.
So,
stop stabbing me with that pitchfork.
Oh, this is such an old joke.
I'm an old guy, man. Ask Blake.
I know.
It's a great chart, Steve.
Yeah. So this is one of the reasons I've been monitoring that. Now, having to do, I'm still long, by the way, the DAX, because I think that between the two of them, the DAX looks somewhat better. I'm still short the S&P on the other hand. So what I'm losing from one, I'm making from the other. And we have to admit that DAX has been now stuck for several days in this confluence of the 61.8% feed from the highs and this horizontal resistance area. So the DAX as well is stalling here at an important level, as the S&P is not exactly stuck, because an ascending wedge of course keeps moving its trend line resistance, keeps moving, since it's inclined, it keeps moving higher. So every single day we have a little bit more of upside to cover without breaking above this wedge. But I would have to assume that this is a steep enough wedge that seeing a breakout from it and an acceleration seems almost impossible, in the sense that the momentum higher has already been more than strong. By the way, since I know that Stelios can't be with us during the past 5-10 minutes, Stelio, from a macro perspective, anything else you wanted to add before I go on with more charts and questions?
Well, I missed quite a bit of what Blake said. So I mean, we had.
Don't worry, I'm going to tell you.
Okay. We had stuff out of Europe today.
He covered broadly that we had better data, better CPI from Germany, and better Eurozone GDP. What else is there to mention? Yes.
That was the main thing. The other thing is we see oil rallying quite hard today, and I think one of the main reasons was that if people remember previously, the Saudis had said that they will increase production as price rises. They don't want the market to be undersupplied, but we had a comment from them earlier today saying that they're not in a rush to increase prices, and I think that was the kicker for oil to start rising. And we're at month end and the dollar is falling, so I think that then took over. But that's something just to so that's something
I'm of the opinion that very frequently turns in a market they begin because of some kind of a statement. Don't forget that on the other hand, last week crude, and let's have a look at it, crude reversed lower after some comments that Trump made. So, one way or another, commentary can really shift the market, but the market cannot keep going just because of a comment. I mean, this can be the catalyst for a turn, but it cannot keep going, due to that. So,
Also, let's not forget, actually, Joe, thank you for reminding me, we had the situation in Venezuela escalating this morning. So that's definitely going to be influencing oil price. So we said it on the blog post, right? We said that there's always a possibility of black swan events creating spikes. So it's something that oil in particular is always very vulnerable to, or very prone to bringing such surprises because of events that can happen from one day to the next. So yeah. So I don't. Apart from that, I think Blake covered pretty much everything. We might have lost Steve.
Did we lose Steve?
I don't know. He is unmuted. Oh, his connection went down.
All right. Well.
Okay.
As a result, I'll take back over. That's why I continued on to stay here.
Have to wait for a minute.
Yeah.
Okay, I'm back.
Oh,
I don't know what happened exactly. Yeah. So I don't know if you can still see my charts. Yeah, I don't know why, because
no,
I haven't moved
actually
at all.
I took the charts. Steve, I'm going to pass back over to you. And can you hear us?
Yeah, I can hear you, Blake.
I don't. It's interesting. I see. Let me pass it over to you. Did you get it?
Not yet, I think.
I think you're going to have to take it from me.
Okay, what about now? Does it work? I still see that I'm the presenter, so there's nothing I can do.
No, I'm the presenter now. So.
Okay, let me make you the presenter according to my platform. Yeah, obviously it got bugged when my connection went down because it still thinks that I'm the presenter.
Right. Well, while you're messing with that, so the euro just spiked to 112.27, which, remember Paul Franco this morning, he his bias chart resistance was right here at 112.28, which is the previous support, current resistance. So we're pushing up against that resistance right now. The cable continues to stretch its legs higher. Like I said, while we're above 130, the risk is for a continuation higher for the pound, and actually the euro and the pound against all these crosses really look quite strong. I mean, look at the here's the euro Aussie continuing to stretch its legs higher, euro New Zealand looking good, pound Aussie obviously continuing to spike up as well as we broke that downtrend line. Pound New Zealand not as good, but still looking a little bit better as well. So the cable pair is looking all right. The dollar Canadian has stalled. I mean, it stalled because a couple different reasons. I think the dollar is still weak. You can see how the euro and the pound continue to be strong. So I think that's capped the any rally that we've seen in the dollar Canadian. Also with crude oil continuing higher. As Stelios was pointing out, how we've had a strong rally in crude, that's keeping a lid on the dollar Canadian as well. The only way the dollar Canadian is going to get higher, up, towards this 134.60 level, is we're going to have to see a decisive move higher.
Joe just Skyped that there was a coup in Venezuela.
Yeah, and obviously and Stelios mentioned that as well. The quote unquote black swan event that was possible, and in Venezuela is keeping keeping crude oil bid. The dollar Canadian is going to have a very difficult time, rallying much further unless you see.
I think that any change in Venezuela is going to be eventually crude negative, because don't forget that Venezuela's infrastructure has been deteriorating for a long time. I mean, it's at least like 3-4 years that Venezuela's infrastructure has been deteriorating because they do not have the resources anymore, to keep maintaining it, because they're completely broke. So eventually, there is no question about it, there's going to be some shift in government in Venezuela, and when that happens, which as usually I'm more or less convinced that it's going to be a more U.S. friendly and the rest of the world friendly.
Yeah, is this our guy that we're backing? Did he take control, Steve?
Yeah, as it
So
seems.
the
Yes.
Chinese and Russians aren't real happy
Yeah,
about
he
what's
hasn't
happening.
he hasn't taken control yet, but he's got part of the armed forces with him. So
Okay, so the army is
Exactly,
starting to defect.
and it's more or less clear that the wind is shifting in that direction.
Yeah.
I think it's not a matter of if, it is a matter of when. So when Venezuela finally gets, this new type of government, which is going to be, a lot more Western world friendly, I'm pretty sure that there's going to be a lot of inflows of money in Venezuela so they can actually rebuild their infrastructure. Of course, this is not something that's going to change the crude dynamic tomorrow or, in a month from now or 3 months from now. But I'm pretty sure that in a year or two from now, Venezuela is going to be producing a lot more crude than it currently does.
And crude is above the 50% retracement. We're closing in on the 618 retracement that comes in just below $65 a barrel. So at 64.80, we're close to that. So in this you can see some of this, previous just big pool liquidity zone right through here. That should offer crude some resistance as we make our way up there as well. But that move that we're seeing in crude is giving the dollar Canadian hesitation right now, and the dollar Canadian actually it's given back most of its gains following the GDP numbers. So we're already right back towards the level that we're at, following the news. So you see the news, it spiked us up to 134.60. We're already back down to 134.38. So we've already just kind of retraced most of that movement already. One of the other currencies that we haven't talked about today, guys, is the dollar yen. And the dollar yen, I mean, this was the point that I was making during the week ahead video, is the dollar is showing signs of weakness and has been showing signs of weakness against certain currencies. And one of them in particular was the dollar yen. And the dollar yen actually hit new trend lows overnight as we broke through the 111.40 level. And it looks like the dollar yen could be, in store for lower prices. Now, if the dollar can firm up against other places like the euro and the cable, at least stop this move higher, then we're going to see currencies like the euro yen and maybe even the pound yen that might start to roll over here, because I don't know if you've seen it yet this morning. The S&P, even though it's not bearish, it is. It was trading just a little while ago near its lows of the days, lows of the session. So I think if the S&P starts to roll over, we might continue to see, this yen strengthening, and maybe the dollar starts to show some signs of life, especially once we pass the New York, or excuse me, the European close. And that's something I think we should also pay a little bit of attention to here. Steve, what other you wanted to look at some cross rates, and I got the charts. I don't think
and unfortunately you can pass them to me because my platform still thinks that I'm the presenter. I tried,
right, exactly. Things. So, but were there some cross rates that you wanted to take a look at that you
Pound Aussie has broken above a pennant, so I think it looks rather good. Pound Kiwi, you mentioned it before, is consolidating in a long term. A wedge which is now has tightened a lot. So we have like that confluence of resistances. I can't really turn bullish the pound Kiwi as long as it remains below 195.75, because it's a confluence of that ascending wedge and the 61.8 of the last move lower. So I do think that sooner or later we're going to have some development there. Either with a break below 193.40, which is the previous low, or above 196. Now, you mentioned pound yen, and pound yen is one of the pairs I was monitoring, because pound yen has a floor at 144. So we are getting a lift of once again after finding support at 144. So as it seems, 144 still remains a very, very strong support. So I think that somebody that wants to be buying the pound yen, just by drawing a descending trend line from the March 14 high to through the April 15th high. I think that's a trend line resistance they should be watching. A break above that one should open the door for another retest of the previous highs, which are just below 149. So I think, you know, either a break below 144, which currently doesn't seem like it's about to happen, we're actually getting a rebound from it, or a break above that descending trend line is going to produce the next move for the pair. It looks to me very likely that the next move is going to be to the upside and the retesting 149. We're currently seeing pound, as you said, very well bid. And you know, despite the yen strength, you know, this level is like, you know, solid. Now, USD yen is an abomination. We still, you know, as you mentioned, we're still holding within that longer term symmetrical triangle. So whatever happens in it, I really have stopped paying, you know, too much attention, because you can go nuts just by watching it go up and down, but not really breaking any major technical levels that can get the market going. You know, those were the things I was actually monitoring, as well as I mentioned, USD NOK, USD CAD. I think that if crude gets rejected from, you know, current levels, those are the levels, by the way, I mentioned in my blog post, that, you know, a rebound at, you know, towards 64.60, which is exactly where we're testing now, will be a nice risk reward opportunity to, you know, try being short. So I do think that the rejection from here is also going to produce the next leg higher for those pairs. So those are the things more or less that I was monitoring, Blake.
All right, very good. Thanks, Steve. And you know, I do want to mention that the dollar Canadian it's actually holding up pretty well. And you know, obviously we had the weak GDP numbers that are weighing on the Canadian currency right now. But if in the event, and by the way, silver just took an absolute nosedive, and so is gold, which we haven't seen the effects in the FX market just yet, probably because of the end of month flows. But I want to point out that if crude does find some resistance up here and the dollar does find some support, this dollar Canadian, in my opinion, is prepped for a move higher. And although I'm not long right now, you know, if you were here earlier during the GDP numbers, I scalped it a little bit. I think we have to keep an eye on the dollar Canadian, because if we get above this, and I'm going to put an alert on this trend line here. If we get a move above 134, let's just say roughly 70.65, that's going to be a pretty bullish event for the dollar Canadian as a whole. And
by the way, Blake,
yep.
I always cover a little bit the metals, and you can help me with that. I think two metals are at key junctures at the moment and very interesting to monitor. One of them is silver. You mentioned it. Why? Because silver is currently, like, you know, stuck in a range that has been, you know, getting smaller and smaller by the day. Because if you go back to on the daily chart to, let's say, 20th February, you ignore the wicks and you just, you know, take a descending trend line resistance, you'll see that we got rejected from that once again. While on the other hand, at 1480, we have a very, very solid horizontal support resistance zone. It was resistance in the period from August 2018 to December 2018, while silver was oscillating in a rectangle, and it's currently acting as support. So silver is really, really, really running out of space here. A break below 1480 or above 15 should get this metal running one way or another. So I do think it's really worth monitoring it. I don't think it can last more than a few more days before we do see you know, action like that. And the other one I'm still short is palladium. By the way, I don't know if you've seen yesterday's daily candle of palladium. It's like horrific. It's
wait, what is XPD? That's it.
XPD USD. Yeah.
Yeah, we were looking at it yesterday, and yeah, big rejection at the 50% retracement.
Not only that, it's not only the 50% feed, it's also the 50 DMA, and it's also, if you draw a parallel, if you clone, if on the daily you ignore that little wick and you draw an ascending trend line support and you clone that, you will see that it was perfectly channeled. So it was also channel resistance, and we got rejected from there. And now we're testing that channel's support. So if we do break below, let's say 1350, 1355, I think that the next leg lower that I was looking for will be starting with my next downside target being at 1265.
All right, and that looks like a this would actually extend to a 1282 would be the 127% extension of this last push higher. So that's something to take note. All right, Steve. Well, hey, thanks for tuning in. I know you're out of town, and thanks for all your
I'll
inputs.
be back tonight, so I'll be on the webinar from my computer starting tomorrow.
Great. And Dale, I pass it over to you. So I know you have an interview coming up, and I want to thank everybody for tuning in today.
Thank you, Blake. Thank you, Steve, for taking time out of your vacation.
Thank you, Blake, for helping. Thank you.
My pleasure. And thanks, Stelios.
Thank you, Stel. All right. Good hunting, Blake. Hello, Jonathan. Welcome to Face. Making you the presenter now. Looking forward to having a conversation with you, my trading warrior brother. Waiting to hear your voice, and there's a drop-down menu for your mic, and there's your car.
I wish it was my car.
Is it Jaguar?
There. Yeah, Jag E-Pace.
Oh, okay. Well, you know what? I hope it becomes your car very soon.
Oh, and me. Hopefully,
you know, it's great that you have an image of something you want. It's NLP. You know what the mind can conceive and believe can be. Welcome. It's really great to meet you, John.
And you. I've just been watching the webinar and really enjoyed it. Really enjoyed it.
Thank you very much. Yeah, it's the strongest team I've ever been part of in the FX world, and I'm glad I reached out to you on Twitter. And John, this is everyone, Jonathan Kibler, and John, you want to tell us a little bit about your journey in the business, and
Absolutely.
You know how you ended up. You're at point B, and how did it start at point A? What was your first entree into the trading industry?
Yeah, of course. Can you just see my? Can you see my charts at the minute?
You have your US dollar chart up here.
Yeah, cool. Okay, so yeah, basically I started in 2013, and I was 18 years old when I got into looking at some charts. Obviously,
what were you doing? Were you in school?
I just left school, and my dad actually owned a construction company, and I went straight into kind of working for him.
Okay.
So I was just a labourer for him, basically trying to work my way up, and so yeah, I didn't really enjoy what I was doing, put it that way. I didn't like the really early starts, the cold weather, and I was getting a bit sick of painting walls, to be honest. So it was quite an unusual way of kind of getting into the market. I basically at the time was just so kind of disheartened with what I wanted to do, didn't know what I wanted to do. I just kind of Googled online how to make money, which seems a little bit daft, but a lot of stuff came up. There was, and then there was an advert for Forex. So I never heard of it before. Asked my dad about it. He said, "Oh yeah, that's the currency markets, trading, and things like that." He's looked into it in the past. He even looked at penny stocks in the past and things like that. So I just basically followed the advert, and it just kind of led me to go into looking into the Forex markets in a little bit more detail.
Okay, so there's lots of landmines on the internet when it comes to trading and FX. Did you run into a few?
Absolutely. I feel like I was one of the kind of people that were I jumped into a couple of things a little bit too soon before actually looking and identifying them and really looking into the history of the company or the people that I was being approached by. Because I feel like I've gone through a proper sort of retail trader path to understanding what to look out for. And in terms of, there's definitely a lot of sharks out there. that, because it's one of those things where I feel like if you have a little bit of knowledge, and you just have a little bit more knowledge than somebody else, then somebody deems you as an expert immediately. And there's a lot of sharks that aren't, or there's not a lot of people out there managing people's expectations, or at least being honest with those people. They're just seeing the education side to Forex as a means to an end to, for their own particular business gains.
Well, let me ask you, what were some of the experiences that you had, and maybe people who see it now or see it later might recognize it and be able to avoid it? What kind of things happened to you when you're out there searching? Give us an example or two.
Yeah, so essentially, there was a company in London that I went to immediately, and there was this kind of 2-hour free sort of course to go on to. So I think when you go to that, you need to go with an open mind, and you need to go with a few questions. Obviously, when I went to this workshop, or like they called it a workshop, you essentially sold the dream. You sold that you're going to be, driving the Jag in 2 weeks. Do you know what I mean? You're going to be rolling in money. You're going to be basically like, they were showing this is like my life now. It was very much like.
So they were selling the lifestyle.
Absolutely.
Okay, because there's a lot of that going on. A lot of $10,000 millionaires.
Yeah.
And have that lease or rent that car that you have on your screensaver, so they could have some photos taken of them, or they, get on a private plane. So, okay, so they were selling lifestyle, and as far as what they taught you, and the trading aspect of it, did you actually go live with real money and try their methodology out?
Yeah, so essentially what they were selling was another course to go on to for like a couple of grand. So I was I was sucked in basically by those people. And I thought, you know what, a couple of grand, let's invest it into myself. Let's see what I can learn from it. Still being completely new to the markets, I had no idea really. So I went.
Were you
down
sucked
there.
in, John, or did you just make a bad decision?
I think a little bit of both. I think for me, it was kind of a decision where I looked at what they had, and at the time, as being very young as well at that time, I was sucked into that lifestyle side of things. That was the one thing that I looked at and thought, oh, well, this tool.
Yeah, that's why they do it. It works.
Yeah, absolutely.
Yeah.
And there were, and don't get me wrong, there was 30 other people in the room, and I'm pretty sure 25 of those people as well went and paid the £2,000. Because everyone's kind of, I feel like with the markets, everyone's kind of looking for that, that lifestyle of it without.
All right. So that leads me to a question I ask almost every guest. They were selling, in a couple of weeks. First of all, I don't think anyone should, if they're going to go live in FX, trade anything more than a micro lot for 6 months. At least they take it seriously. And I want to ask you, since you've been doing it now 6 years, right? 2013, you said you started?
Yeah.
How many years did it take you to make breakthroughs to where your confidence level of being more than just average or adequate in the markets, did it take you 4 years?
Yeah, easy 4 years.
Okay, and it's still going on for me 40 years later. I'm finally getting the hang of it after 40 years.
Yeah. And I think, what I love about this process is that you're constantly learning. And the market will always teach you a lesson when you think you're getting a little bit too cocky. It will definitely bring you down to earth.
Would you say that maybe after that experience, you were mainly self-taught, or did you have a good mentor or people that helped you along the way? I mean, you can have, just like you could have bad experiences, you could also have good experiences. I've talked to people that have been fortunate to hook up with the right people that expedited their journey. Did that happen for you?
Yeah, definitely. I think I was very fortunate that I found somebody that wasn't really into he was just trading by himself.
Uh-huh.
a Portuguese guy, and he was
Where'd you find
really
him? On Twitter?
yeah. So just literally on Twitter.
Isn't that
Then I
something?
followed the methodology on sort of Facebook as well. They had a Facebook page, so I went and viewed that a little bit. That was my first sort of mentor, and I only chatted to him really via Twitter and stuff. I wouldn't say like that person was, you know, massive in what I was doing now, but they kind of showed me a few things of what to look for. And just by monitoring their sort of charts, so very similar to what kind of you guys have here with ForexAnalytix, you know, also you kind of following the breakdowns of these, you know, people that are trading and stuff, and you kind of pick up certain things from those, even if it's just a simple piece of information. It's something that you might not know beforehand. And then with the kind of same company that sucked me in, they with the £2,000 that I paid, it was almost like you get 3 free sessions with what they said was a trader. And fortunately enough for me, it was somebody that did trade, because they did have this massive kind of trading floor as they were showing it to people. And there must have been about 20, what they said were traders in this room, teaching people on a one-to-one basis. Now, what I found out later down the line is a lot of them were just salespeople. And the guy that I had sort of told me that, and he left the company because it was going down that path. But I was very fortunate for him because he basically taught me my first sort of strategy around trading. And he was like, look, he gave me kind of like a blueprint of what he did as well, and was almost like, right, you follow this path and you'll be successful. So I was like, okay, I'll go away, I'll have a little look
So
at
you
it.
really didn't get sucked in?
Well, yeah, it's just kind of, yeah, I just think you do with the whole,
You know, because actually, you know, you ended up with somebody that you learned a few things from. I mean, a blueprint for a career is a valuable thing. So we've covered this now, John. So let's talk about the dollar.
yep,
That's what you want to talk about. And I'm looking at your setup here, and I see you have looks like a supply demand zone. A lot of people were saying it
yep.
was a breakout over 97.80.
Mhm.
Tell us what's the bottom blue line, and how do you use it, and what's your style now? Is it supply demand zones? What are you seeing in the dollar? Where do you think we're going?
Yeah, so the kind of bottom line is just a support area I've had drawn on for a while. Typically, my sort of method is I always I need a why to look at a chart in the first place. I need a reason to be involved with the currency pair, whether that be the currency is at a significant supply demand zone, or whether a currency is just absolutely, you know, being steamrolled. I really like to look at extremes in currency strength and weakness, to then potentially trade a sort of reversal setup. I feel like my eye spots reversals
What do you
easier.
use to measure an extreme?
So I have a couple of different methods. Sometimes I just use currency heat maps that you can find on the internet around, or I kind of like to do it myself by monitoring the major currency pairs. So simply what I'll do is kind of look where the dollar's positioned, look where major currency pairs are positioned, and see if there's any kind of disparity between currency strength and weakness. So for instance, today, you know, the pound seems to be pretty strong at the moment. So I'll look
Leading the way.
yeah, so I'll look to kind of go in with the mindset of, well, if the pound's strong, is there a weaker currency I could potentially trade it against? And is that currency at a significant supply or demand zone? Or has that currency been strong for a while and it's come to a key area? And then to kind of looking at the prices around that. So for me, like the dollar for me, it's a crucial week for the dollar. You know, we've got the interest rate decision. There is a lot of talk about there could potentially cutting interest rates, which could be quite harmful to the price of the dollar. But we just don't know. We don't know what they're going to say. So for me, it's kind of, I'm sitting out of the dollar at the moment, apart from I am in a current dollar Norwegian krona short. And that to me is just because crude is obviously still pushing a little bit higher. I personally think that crude is going to move lower as well. I've obviously watching you guys as well, and you kind of have a similar sort of view to what I'm looking at with it.
Yeah, it makes me nervous now. Too much agreement.
Yeah.
Yeah.
But like,
So, so you have the dollar chart up here. Do you have a bias now with the fact that we took out what was supposed to be significant at 97.80, and now we're trading underneath it in your demand zone?
My theory here is here. I'm really going to wait for this weekly close. I really want the dust to settle this week, in my opinion. I'm quite conservative in the fact that I like to wait for added confirmation. I'm happy to let the market kind of dictate to me where it wants to go initially, and then I'm happy to sort of just piggyback it. So for me, I'd like to see this weekly close. If it closes back within this, sort of demand zone area, it could be considered as a false breakout of these highs. If that's the case, then we could see some dollars selling off. I did take a look at the quarterly charts, for instance, and just had a little look around. Sometimes I like to look at where the quarterly highs and lows are. And sometimes these quarterly highs can make a difference. Quarterly lows can make a difference as well.
Where's
sometimes
that brown line, 99.20?
Yeah, it's around about this sort of 99 area. Yeah, around about this low here.
Interesting.
And that was the reason I was looking at that, was looking at the daily chart. Just kind of considering if the dollar was to continue this long move, where could it kind of stall at? So just looking at a few fibs, there was a potential, 1618 just sitting up just above around about that 99.30, which kind of adds slight confluence to this zone up here. So it was just kind of playing out in situations of if the dollar was to go long from any sort of area around here, where could it kind of find exhaustion at? And that could potentially be up in that sort of area, just up there. So with that kind of in mind, I'll kind of take a look at the other sort of major currency pairs. And I mean, it's not, I wouldn't say the market's been fantastic this first sort of quarter.
Well, volatility's been at historic lows. Let me ask you, since we do have the Fed tomorrow and then we have NFP Friday, do you flatten out before red events, or are you willing to hold positions into them?
It really depends. I kind of look for positions on, I'd rather have nothing open going into the event, and then look for places where the market could spike into, to then potentially take advantage. So for instance, if looking at the dollar index and we do see the market kind of, push considerably lower, I'd be looking at areas where potentially other people may be currently long. So if people are long down in here at this sort of 96 area, 96.80, then their stop losses are probably sitting just below these lows here. And if the market spikes below that, sometimes I'll take a buy order around about the same sort of low area to see if it can push back up and reject that.
Okay. All right. So I notice you have a YouTube channel. What's your business model, John, and what are you trying to accomplish with your YouTube channel?
So essentially, just kind of wanted to put my charts out there. I think what for me was I want to try and hold myself more accountable to my trading decisions, trading positions. So I thought, well, if I start putting my charts out publicly and my trades out publicly, then I have to hold myself accountable for that. There's no real motive with regards to business or anything like that. So for me, it was just kind of putting my charts out there, and just, if it helps somebody as well, by someone could watch my stuff and they learn from it, then that's just a bonus.
What is Blueberry Markets?
So Blueberry Markets that's a broker in Australia that I do some currency analysis for. So their clients, I basically, send out reports of what I think is going to happen, X, Y, and Z.
So you're the head currency analyst for them.
I am, yeah.
Well, congratulations.
Thank you. It's pretty cool, and what I like is the fact that they really want to be these kind of transparent brokerages. Obviously, brokers are there to make money, but if we can try and help people to make money in a safe way, and with some kind of analysis behind it, then I feel like we can give a better service.
Would Blueberry like me to open an account and churn my own account?
Say that again.
Would Blueberry be open? You know, I'm an American, so they won't take my account. But I was wondering if they'd be interested in having me open an account and churn it and do a lot of volume.
Well, at the end of the day, a broker wants to make money. You know, I'm not going to.
I have to lighten it up a little, John.
Yeah.
Anyway, you know, the broker always wins.
The broker
right?
always wins.
They're
absolutely.
like lawyers. Only the lawyers win. So,
yeah.
So what do you do? Do you put out daily commentary for Blueberry? They have a newsletter?
Yeah, so newsletters, and then obviously if I go over to this page, I usually put out a few charts of interest a day just to have a little look at, just to keep the interest sort of there. So, you know, Kiwi dollar, I was doing some swing trading on Kiwi dollar and Kiwi yen, just because they're at those key support areas. And I just basically, you know, update this area quite often. I put a video on their YouTube channel every day, just kind of giving my opinion on where I think the market's going to be going or what we can potentially look for. And then just
do people have to open accounts with Blueberry to get access to your research?
Nope.
Okay. So besides your YouTube channel, this is where, you know, people could see John Kibler's ideas and works and biases, right?
Yeah, absolutely. I feel a thing as well with, you know, posting charts on Twitter and that. I've seen quite a few debates lately, and, you know, people are kind of bashing other people around and saying like, "Oh, you deleting tweets and all this kind of stuff." And I don't want to be a part of that nonsense. You know, it's just.
You ever see anyone on Twitter say I was wrong?
Never. When do you?
How about I don't know?
Yeah, exactly. Or it's always I've done this, I've done that. I've made X amount of money. I've done this, and at the end of the day, you know, that's, you know, people don't want to see you being wrong. And it's one of those where, like, I don't understand, because if you go in the mindset of into this game without, you know, thinking that you can lose a trade, you're going to do horrendously.
So you said you don't know why people are happy to see other people lose? Is that what you said?
Yeah, so like I don't understand.
Okay, let me explain it to you, because I have a little more than 6 years in it.
Yeah.
Well, you know, you've heard misery loves company.
Yeah, well,
and people root for other people to fail to rationalize their own inadequacy, and it's not allowed in any trading room I've ever facilitated or moderated. That's one of the worst things for a room. It really makes it toxic. I have a couple of questions for you.
Yeah, sure.
How did you become an analyst or get noticed? Because, you know, a lot of people would like your job. In fact, they're sending out applications right now.
Yeah.
How did you land it?
So I actually opened an account with Blueberry when I I'd say probably three or so years ago. And I did that basically off a recommendation of one of my mentors. They were like, this company, I know the CEO, you know, they're looking to do whatever and all that kind of stuff. They're trying to be, you know, really good with their customer service and X, Y, and Z. So I was like, okay, cool. You know, I'll go and open an account with them, started trading. From that point as well, I kind of met the CEO and, you know, just started chatting with that guy. And I noticed that they were putting out certain sort of trade calls and stuff. And it was very fundamental base, and there was the risk to reward. I was looking at some of the trades, and I'm not bashing this other trader. Obviously, you know, obviously the person that they had in had their way of doing it, and there's 1,000,001 ways to do this. But I felt like if we could maybe increase the risk to reward on some of these trades, or maybe go with a bit more of a method that may be a little bit safer, they could grow. You know, because at the end of the day, they want people to trade, but they also want to retain clients as well. So if we can give out good information, trade in a safe way, and increase the risk to reward for people, maybe they will, continue to stay. And, and it's been working. People have been, trading alongside us. We get lots of thank you messages and things like that, which is awesome. Obviously, when it goes wrong and you have a couple of losing trades on the bounce, you do get those people going, oh, thanks for losing trade, blah blah blah. Yeah. But I'm also a big believer of you shouldn't just follow everyone blindly.
No, we're all captains of our own ship.
Absolutely, you should do your own research into whatever anyone's talking about, because there are literally 1,000,001 ways to trade the market.
Yeah, skin a cat. So another question is, what's the best way of reaching you? Ricardo Johnson.
So the best way of reaching me is probably just on Twitter. If you go follow me on Twitter, just John Trades Forex, or I do have an email that you can find me on as well. And it is my my other company name, but essentially this is where you'll find me at the minute. And if you just want to chat about trading or whatever, just drop me a message. Sometimes I'm hopefully going to set up a newsletter and something like that soon.
I like that animal spirit.
Yeah, well, I'm a Leo, so okay. I actually tried with my dad. My dad was in the construction game and he closed his business down to join me doing this.
Oh my God, that is really a good story. Because he could do this till he's 90.
Well, that was his theory, and the thing as well, we were looking at the amount of money he had to risk with in terms of funding or financing a job, and he was looking at it going, well, hang on a minute, I can risk less doing this, and I can work from home, I can do this, all that kind of stuff. So we just started this journey sort of together. Obviously, I've got a few more years on him because he was still running his construction company as well.
Yeah.
So I'm really kind of helping him get to a position where he can, profitably trade consistently. He still makes his mistakes and stuff.
What a great way! What a great wrap up, father son team, and kind of role reversal. It's normally the father teaching the son, and the son is teaching the father, and like it or not, now John, you're my trading warrior brother, and it's my hope that pips rain down on you and your dad and everyone that your work touches. And I'm really glad I reached out to you. It was really my favorite part of the interview is what you're doing now to help people and how you're working with your dad. I wish you much success and him too. And really was a pleasure meeting you. And thank you for coming here and spending your most precious currency, your time, to edify our community today.
No, thank you. Thank you for inviting me, and hopefully we can do it again sometime. I'd like to, that'd be awesome.
Okay, what time is it there?
It is 2:30, so 2:30 p.m.
2:30 p.m. Okay, all right. So everyone, you can reach John at John Trades, and there's his email address. John at lionheart-fx.com, and you can catch him at Blueberry, and there's
Twitter handle.
John Trades Forex with the at in front of it.
Yeah.
Okay. And that's a wrap for Turnaround Tuesday, everyone. Remember, don't just count your pips, count your blessings, and who knows, maybe there's someone in your family, if you know how to trade, that would like to learn from you. And it's kind of like, instead of giving someone a fish, teaching them how to fish. And that's what John is doing. So, John, thanks again for being with us today.
Thanks, Dale. Cheers.
All right, buddy. Good hunting during the Fed and NFP this week, bro.
And you. Hope it all goes well.
Okay. Adios, and everyone, we'll see you tomorrow. Enjoy the rest of your trading day. Good hunting, and adios. See you, mate.
See ya.